how do we get from where we are today to a hyper Bitcoinized world that the purists would like? And here's my answer. We need to build the infrastructure first, and we're building it.
Building it in the face of massive hurdles and headwinds. First, they ignore us, then they laugh at us, then they fight us, then we win.
It's just going to be very interesting to see just how much this catches on. It just sounds so silly, but maybe it's not.
Bitcoin reminds me of Oscar Wilde's definition of fox hunting, the pursuit of the uneatable by the unspeakable.
Well, it sounds better than what I used before.
Why were they so afraid of us? What was it that caused the White House, the Federal Reserve Board of Governors, the Kansas City Fed, and the majority whip of the U.S. Senate to attack a business that wasn't even operating yet? It does indicate, frankly, how afraid they are of this technology.
Bitcoiners are realizing we are here, the stage where they fight us. The carnage of the epic failures of various crypto fraudsters has given way to a coordinated effort by regulators and policymakers to crack down on the entire crypto industry. One of the chosen weapons, using the banking sector to choke fiat on-ramps. Caitlin Long has been on the front lines fighting for Bitcoin's cause for years. She's founder and CEO of Custodia, a Wyoming bank that recently filed to become a member of the Federal Reserve System, but was denied.
Unfortunately, we've been rebuffed by Washington, D.C. in a rather curious way that certainly confirms that politics has entered.
Custodia is a unique case study. The bank's mission is to be a compliant bridge between the world of legacy banking and this emerging ecosystem, and tried to go through the front door via disclosure and permission with the Fed to serve as a responsible alternative to the many digital wildcatters of the last year.
There were 136 banks serving the crypto industry. This was not a small number of banks, which is interesting in the context of Custodia's denial for asking to do the exact same thing that 136 banks are already doing. But interestingly, that report disclosed something explosive, which is that 11 banks were involved in suspected wire fraud involving FTX.
In the wake of FTX, a hazy picture of intergovernmental collusion and resistance is emerging. And although Long had tried to help regulators sniff out bad actors in the space long before some of the massive crypto meltdowns, she suddenly became associated with the very problems of unregulated and unethical practices that she was working to change.
Custodia, quote, proposed to engage in novel, untested crypto activities on open, public, or decentralized networks. As we learned, that would be a recipe for disaster. So I'm glad both the Fed and the SEC, among others, are working to insulate our broader financial system and protect investors from the instability of crypto.
I personally handed over evidence to law enforcement of probable crimes committed by one of the big crypto frauds and literally tried to help law enforcement move against them, in spite of the fact that I was behind the scenes doing all this work to help the good guys, so to speak, clean up the fraud in this industry. We were the proverbial messenger that got shot. I don't know why, and I think light needs to shine in some dark corners as to what really happened here. Why is it that Sam Bankman-Fried got all that access and folks like me were stuck in the bowels of the bureaucracy?
While folks in Washington were charmed by the likes of Sam Bankman-Fried, that bureaucracy was simultaneously working to deny Custodia's application for membership with the Fed.
They were doing the right thing. They were filling out an application. They were going through the process. And now they're saying, no, you look like X, even if you're not X, and we're going to treat you that way. And so, I kind of wonder if it's a square peg round hole kind of thing. And right now, since there's no legislation, there's nothing to stop these agencies from using their existing authorities like this.
I find it rather amusing that Washington came guns blazing against a company like Custodia and shot a bazooka at a bunny rabbit.
The overkill Custodia faced appears to some as an extension of Operation Choke Point, the Obama-era practice of exerting executive branch pressure on undesirable industries by indirect coercion of the banking sector. The various watchdog agencies of the executive branch, including the SEC, are cracking down harder at an increasing pace. Crypto getting hit hardest, but the ripple effects also being felt by Bitcoin and stablecoin companies.
So the SEC is looking to increase requirements for what types of companies can legally hold investor assets.
The same day the Fed rejected Custodia's application, the central bank also issued a statement broadening its authority to cover non-FDIC-insured state-chartered banks. And the National Economic Council released a policy statement of its own advising against banks from transacting with crypto assets. We also saw crypto-friendly bank Signature first get condemned by lawmakers for providing services for FTX, followed by the bank announcing it would halt doing business with many of its crypto clients and exit the stablecoin business. In February, the SEC cracked down on staking services, fining crypto exchange Kraken $30 million. The SEC notified Paxos it plans to sue the company over its Binance USD stablecoin. And Binance US also under investigation and being called an unregistered securities exchange by the SEC. To date, the Fed, the FDIC, and the Office of the Comptroller of the Currency has issued not one, but two joint statements discouraging any contact with crypto clients or crypto itself, citing concerns about, quote, safety and soundness.
Our federal regulators are coming to life, and they're bringing down the hammer on crypto.
One of the biggest recent headlines, the collapse of Silvergate, which was also caught up with FTX, the crypto-friendly bank announcing a shutdown of operations and voluntary liquidation. The company's share price had plummeted more than 90% off its high as the bank scrambled for a buyer in recent days. Silvergate has been under investigation by the Department of Justice for alleged money laundering, and you may recall its popular Silvergate exchange network that enabled digital asset transfers similar to bank wires and was a critical piece of infrastructure for the crypto market had already been shuttered shortly before Silvergate's crash.
A big question that remains is who will bank the crypto industry. Silvergate was sort of a one-trick pony in that regard. Now that it's gone, who's left?
The recent enforcement actions are part of a larger debanking wave that has been happening for more than a year across the industry. Another example, Citigroup severing ties with Swan Bitcoin, which produces hard money.
This was with absolutely no notice, no email, no phone, just a complete quick shutoff. You could not get in touch with anyone to give you a reason. They were not allowed to say why. So obviously that leaves us to assume that it has to be just because, we're involved in Bitcoin. I actually lay most of the blame here on the crypto industry because that's where all this scamming is happening. And so I think there's just kind of Bitcoin being painted with a broad crypto brush.
So what is motivating the sudden attack against crypto, even against companies trying to work in good faith with public agencies so that Bitcoin customers have a place they can trust to buy, transfer, and custody Bitcoin? Is this the Tanya Harding strategy, maiming the competition because the powers that be feel threatened? What that could ultimately do is make the competition even stronger.
All I will say is that as it all comes out, this could be explosive. Custodia was a sacrificial lamb. We were caught up in something so much bigger than just ourselves. Does it absolutely have something to do with the independence of the Federal Reserve from the White House? Yes.
Despite the recent regulatory hurdles, Long and other prominent voices are advocating for a sound framework that brings regulatory agencies into the fold while not inhibiting innovation. After all, we've had a good glimpse of what can happen when the space is largely unregulated and opaque.
I think the industry needs to grow up. The marketplace is waiting for the regulators to say, this is how you register a digital currency. The future of the industry is registered digital assets trading on regulated exchanges where everyone has the investor protections they need. And the investors in general understand the difference between Bitcoin and a stable coin and a security token.
Into the vacuum filled scammers, criminals, and incredibly leveraged business models that should never have been allowed to exist. And the markets have been vicious in burning that all down, and good riddance to it all. If in the absence of regulation, we see the worst of humanity take advantage of other human beings, then how do we get from where we are today to a hyper-Bitcoinized world that the purists would like? And here's my answer. We need to build the infrastructure first, and we're building it.
Building it in the face of massive hurdles and headwinds. First, they ignore us, then they laugh at us, then they fight us, then we win.